All of us at Athas Capital Group would like to take a second to thank you for choosing our firm to explore private money lending. All of us would like you to have a pleasant experience dealing with our process of bringing liquidity to your borrower. We understand it is our job to earn your business, not only on this loan but every loan you bring us.
At Athas, we all strive to bring transparency to the murky world of private money, or hard money lending. As you will soon see, Athas has detailed their lending policies to further ease your choice of who to go with when your client gets turned down by the banks.
If after the tutorial you have questions about our product, or just want to make sure your loan scenario fits our lending parameters, don't feel shy. Call toll-free 877-877-1477 and speak to one of our friendly desk reps. As you can see, our rate sheet is split into many sections. First you will find the credit bucket.
Then, you will notice that each credit bucket has individual LTV bands. Then, each LTV band has 4 choices of pricing.
The reason for these pricing choices are due to the fact that Athas is really not interested in points as much as they are interested in an overall yield, unlike all of the other competitors. This comes in very handy on purchases, owner-occupied deals, and any deal where we might be tight on the loan amount or cash available to be brought into closing. For instance, if your client is going to keep the loan for the full term, then they will want the lowest rate option.
On the other side of the coin, if your borrower is short to close, they can pick a higher rate, with little or no points as a result of that choice.
Then, you will find our general underwriting guidelines. Let's spend some time on this section and go through it. Here we have our areas of lending. On this particular program, the product is only for California and Arizona residential consumer loans. For commercial transactions using residential product, please see our commercial rate sheet tutorial.
Now we have property types. We lend on SFRs, condos, townhomes and 2 to 4 residential units. A lot of you fine brokers ask us if we will lend on a condo project that does not meet Fannie or Freddie guidelines. The answer is a resounding yes.
Let's discuss occupancy. Unlike the vast majority of hard money or private money brethren, we actively lend on owner-occupied properties. Yes, we do fund into the covered loan territory and are comfortable doing so. This allows you to make some money as a broker. Furthermore, with our ability to have the borrower buy down the points with raising the rate, you can ensure you actually make a fair wage on this type of loan. Of course, we also fund second homes and non-owner-occupied transactions, which of course don't have the same limitation on points and fees that can be charged.
Moving on to loan terms. On owner-occupied deals, we only offer one term because of the restrictions of our federal government, and that is 30-year amortization due in 7 years, or often called a 30 due in 7. This program has a 30-year payment and a balloon payment in 7 years. On non-owner-occupied deals, we offer 2 terms. First is a 30 due in 5, and if the borrower only needs to borrow our money for a short period of time, then he or she can choose the 2-year interest-only option.
If they pick this option, it comes with a free no prepay. On this program, the borrower can keep our loan for 1 month all the way to 2 years and pay us off any time with no penalty. When it comes to loan amounts, Athas lends as low as $25,000 all the way up to $1 million. Athas also considers loans past $1 million on a case-by-case basis.
It should also be known that Athas has funded a residential deal up to $4 million and many transactions north of $1 million.
Athas will lend to normal borrowers, like a husband and wife as joint tenants, but we are equally comfortable lending to LLCs, corporations, IRAs, and family trusts. No, we will not make you take the property out of those instruments and put it back into the borrower's personal names.
Athas will lend on full documentation, and we don't look at 1040s the same as a bank, thank God. We also are comfortable looking at 12 to 24 months personal bank statements as proof of ability to repay, and this would be alternative documentation. On non-primary residences, that would be second homes, and non-owner-occupied properties, we also offer stated income documentation.
Let's discuss broker points. If Athas is receiving 2 points or less, the broker can charge 2 points plus a processing fee. If Athas is charging more than 2 points, then the broker can charge up to 5 points. Please keep in mind, we have done a massive amount of data collecting, and in 83% of all deals closed, the broker charges 2 points or less.
Conversely, if the broker charged more than 2 points, the deal had a 90% chance of dying, or not even executing the approval at all. Keep in mind, on owner-occupied deals there is about 2 points in these loans for the broker because of federal lending laws.
Our minimum rate today is 8.99%, and our minimum cost is par, or 0 points on deals that include a 2-year prepay, or 2 points if there is less than a 2-year prepay.
Ancillary fees at closing. This is simply a fancy way to say our administrative fees. Please note that if the loan is to a corporation, or LLC, there will be a special documentation fee.
Rate lock. The rate floats until we go to docs. You might ask, how often do your rates change? And the answer is, not very often.
In this next section, we will explain non-prime product, add-ons, and reductions. Let's break down all the pricing add-ons or reductions for you.
Homeowners Association issues. For those condo projects that have a high non-owner population, or current litigation, please add 0.5% to the rate, and reduce the LTV by 5%.
Non-owner occupied or second home. Max LTV is 60%.
Loan amounts of $25,000 to $50,000. You add 3/4 to the rate, and the max LTV is 45%. You might ask, why do you reduce the LTV so much for small loan amounts? I will tell you that foreclosure, or recovery cost, is the same for a $500,000 loan amount as it is for a $25,000 loan amount. Thus, protected equity is eroded much quicker on small loan amounts.
Loan amounts of $750,000 to $1 million. Conversely, there are lower LTVs for larger loan amounts, because higher-priced properties are harder to comp out, and we must hedge the extra risk with lower loan-to-values.
1 million plus loan amounts. All these requests are individually priced and underwritten on a case-by-case basis. We look at every deal in detail, not only to gauge risk, but to win the approval. We love large loans. Alt doc. Add 0.25% to the rate.
Stated doc. Add 0.5% to the rate. 1 year prepay. Add 0.25% to the rate, and remember, you can only buy down the cost to a minimum of 2%.
6-month prepay. Add 0.75% to the rate. Remember, you can only buy down the cost to a minimum of 2%.
No prepay. This can be accomplished in 2 ways. The first way is, you can choose a term of 2 years, and poof, the prepay disappears like magic. The second way is to add 1% to the rate, and in both cases be aware that our minimum points are 2%.
Commuter neighborhoods. This is a description of outlying areas of a major city where the people usually commute to the inner city to get employment. Some examples of these areas are Lancaster, Moreno Valley, Palm Springs, Temecula, Atascadero, Modesto, Buttonwillow, and so on. These areas traditionally are hit the hardest with value depreciation when it comes to a decline in overall home values.
Well, that concludes our tour of our non-prime rate sheet.
If you have any further questions, please feel free to call one of our friendly desk reps at 877-877-1477 and bounce your questions off of them. Thank you for watching.